And we're back on Reverse Your Thinking, and we're going to reverse your thinking about CPAs this afternoon. It's my pleasure to introduce Queluntam Banjai, but his friends call him Q. Q's a CPA. He's also president of his own company. He has vast experience as a tax and financial accountant. He is a graduate in business taxation from the University of Southern California and has many, many years experience in tax and money management. Q, thanks for joining us this afternoon.
Thank you for having me.
It's a pleasure, absolute pleasure. So tell me something. You have a very interesting name. Give us some background on you. Where did you grow up? Where are you from originally?
Thank you for that question. I was born in a small country in West Africa called Guinea-Bissau. It's a Portuguese colony, and which makes Portuguese, believe it or not, my first language.
Great. How long have you been in the United States?
15 years. I came when I was 18. Yeah.
Okay. All right. Well, then 15 years. That's you're an American at this point. Okay.
Thank you.
All right. But no, we're happy to have you. You know, a lot of people are sort of intimidated by when they hear about CPAs because, I think a lot of Americans are fairly illiterate when it comes to money. And when they think of CPAs, they think of people that are just number crunchers all over the place. Have you found that to be true?
Yes, at first, until they meet me. I'm the complete opposite of the boring accountant that stereotyped, and more accountants that I'm meeting are quite the opposite. They love to have fun, they have friends, and they become to you more of business advisors than number crunchers, right? Mm-hmm. And a simple tax preparer, somebody without a degree and so on and so forth, can be that number cruncher for you. But an actual accountant is able to advise you in terms of planning, in terms of research, in terms of projection, and obviously compliance. So it's there's a big difference between a number cruncher and an actual accountant.
I hear you. You're also an adjunct professor at California Institute of Advanced Management and over at DeVry. What type of classes do you teach there?
I teach MBA students, people trying to get their master's in business administration. And I teach financial accounting, management accounting as well. And it's definitely something that I do with my free time. I really enjoy mentoring the new generation for sure.
Giving back always feels good.
Yeah, sure.
Let me ask you a question, especially because you grew up in a different country. Do you find that many Americans are financially illiterate when it comes to their money?
Yes, absolutely. And it is my job as the CPA to educate them and help them make the right choices, like investing early and investing consistently, and so on and so forth, filing your taxes on time, and doing the small little things that a lot of people don't think of, but they make a lot of difference, especially when it comes to retirement.
You have a lot of clients that are small business owners, correct?
Yes, absolutely.
Well, let's talk about that, because I think there are a lot of myths about what you can and can't do as a small business owner. For example, if, because of COVID, more and more people are now working from home than ever before. Can you take a home office deduction if somebody is basically giving up their office and now they're working out of the dining room?
Yes and no. Yes, if you are a sole proprietorship or you are a business owner, right? Mm-hmm. But if you are a W-2 employee, and this is very important, you are not able to do so right now, at least until 2026, because that's the new law. Back in the days, you were able to deduct your mileage, any expenses that are not directly reimbursed to you by your employer. Mm-hmm. But now you are not able to. So it is a myth that every single person could deduct home office expenses. It's not everybody. It's for self-employed people.
Let me ask you this. In Southern California, and Los Angeles in particular, there are a lot of people that have both W-2 income and 1099 income.
Yes.
So if they have both types of income, What can they do with home office deductions?
They would prorate it in the sense that they would calculate the percentage of what it is for the Schedule C, otherwise known as the 1099, and then the W-2 income that is can't actually use to deduct home office expenses.
I see. Okay. Well, along the same line, and again, accelerated by COVID, a lot of people now are no longer accepting checks or credit cards for payment. They get paid by Venmo or Zelle. If you send money on Venmo or Zelle, is that money taxable?
Absolutely. If you conduct a business transaction that creates a taxable income, you are liable for the taxes regardless of the way that you end up receiving the money. It could be cash, it could be credit card, it could be Venmo, it could be any way that you think of. If you create taxable income, you should pay taxes on it.
Okay. So if it's domiciled in California and they're paid money by somebody that lives in New Mexico,
Yes.
which state do they pay tax to?
It depends. If you don't have nexus, meaning if you're not physically operating business in New Mexico, you pay in California. But I have clients that have nexus in more than one state, meaning they live in California, they went to New York, went somewhere else, worked and earned money. They created nexus. So they created the income in that state. So they had to file tax returns, not only in California, but also in the state that they worked as well. Okay. So I've had a lot of cases that happened.
In Los Angeles, where we live, a lot of people are in the entertainment business, not surprising.
Yes.
But many of those people have their primary residence outside of the state. Las Vegas, Nevada being one particular place where many people in the entertainment business have listed as a primary residence. But if they come into California and they're working on a movie or a television show, but their main address in Las Vegas, which state are they going to be doing paperwork for with regard to state taxes? Because Nevada doesn't have any state taxes.
Yes.
And California has very significant ones.
Yes, so for that particular piece of income, if you will, they will pay taxes here in California. But for the rest of the income that they have, given that they earned income in Las Vegas, they won't file state tax returns because obviously Las Vegas does not have state income taxes. But for that little portion earned in California, then they would automatically have to file income tax returns here in California. That's not an option. You don't have a choice.
Okay, so if somebody's working on a movie in Hollywood, all right, yes, but their place of residence is Nevada, okay, they're doing the work in California and they're being paid by a California company, but they live in Nevada. That's their primary residence, their driver's license, all their ID says Nevada. Are they going to be able to avoid paying state tax in California?
No, absolutely not.
Absolutely.
I don't care. Yeah, I don't care where you have your driver's license or your primary residence. If you earned income in a particular state, given that they have state income taxes, you will pay taxes in that particular state.
So let me ask you this. In the entertainment business and other businesses, they have something called a loan out, whereby an actor or a writer might start his own corporation, and he might direct a studio to pay his corporation, and then his own corporation will pay him. And the corporation is not a California corporation. So if it's that scenario, how would that work as far as state taxes?
That's simple. The corporation would pay state taxes, but the producer himself would be paid in his particular home state, and that becomes the end of it.
Okay. All right. So the corporation would pay taxes on the income paid by the studio minus any expenses for the year.
Absolutely.
And one of the expenses could be a substantial amount of that money put into a pension plan for the employee.
Yes. Why not?
Okay. All right. And then any money paid to the employee by his own corporation, which is domiciled in Nevada, there wouldn't be any state tax on that.
No, absolutely not.
Okay, so that might be a way around it, huh?
Yeah, but the corporation earned the income and the corporation paid its fair share on the income.
Of course. Okay, that's fine. We totally understand that. We're in the middle of the summer. School starts again in about a month or so for most students. And most students in college don't think much about filing taxes. You know, students don't think much about it, but more and more students are working while they go to school. Do they have to consider income tax if they're working but they're still students?
Absolutely, because the vast majority of them will actually be receiving refunds. Why? Because they don't have enough income to be actually paying taxes, which means that all the withholdings that their employers are keeping, the students themselves are going to get those income back. So it makes total sense for them to file tax returns.
Okay, so if I'm hearing you correctly, there's a good chance that students who are working part-time or they're going to school will actually get money back by filing taxes than not doing it.
Exactly. In addition, you have all these credits available to you. American Opportunity Credit, Lifetime Achievement Credit, Lifetime Educational Credit. That's $2,500 credit to you, $2,000 credit to you. You're not going to get these type of credits if you do not file tax returns. I can give you another example with the stimulus checks, for example, $1,800 here, $600 here, $1,200 there. All these things you could actually get through your tax returns, given that you did not receive an actual check from the government. So it makes a lot of sense especially for people that are not earners, if you will, to file tax returns to be able to get their tax refunds. That would help them, obviously.
Gotcha. Okay. You know, a lot of people and students, I mean, it applies to students, applies to other people as well, try to get around taxes by negotiating, you know, arrangements where they get paid cash, what many times people refer to as the underground economy. Is that a good thing to do, or are they better off claiming that money and paying taxes? And if so, why?
All right. So I have to keep it real, because the IRS doesn't give you money back unless you withhold it, right? So if you have a W-2, you are contributing every paycheck, you are withholding to pay your income tax and your state income tax, right? Mm-hmm. In turn, once you file, there's calculations made, which means that if you end up paying more than you should, that's the money that you get back, right? Mm-hmm. So if you're getting paid cash, you are not withholding anything, which means that most likely the IRS won't give you anything back, right? And if you end up filing as a cash person, that means that you're going to be subject to self-employment tax. So that's another 15% in addition to the income taxes that you're paying. Now, you didn't hear this from me. If you're making cash, you are better off not reporting it. But obviously that's illegal. That's absolutely illegal. You should report your income, because if you do not and you get caught, then we're talking tax evasion here, which is not a good thing.
Not a good thing. All right. So Q, tell me, why do CPAs have a bad rap for sort of being antisocial? Why do you think that is?
I don't know. These people have never met me. I'm the coolest CPA ever. It's because of you're supposed to be overweight and have a lot of paperwork around and things of that nature. It's just a stereotype, but it's not true.
It's not true?
It's not true at all. I
Okay.
went to USC and I have a lot of friends that are CPAs, and we're very cool.
Okay. Well, that's great to know, because I know a lot of our listeners don't exactly think of CPAs as, a barrel of fun. But I'm glad to know that that's not true. We're going to take a quick break, and then we'll come back and we're going to talk about crypto. Don't go away. We'll be right back on Reverse Your Thinking. I'm your host, Matthias Gertz, and we'll be right back after this. And we're back on Reverse Your Thinking. We're talking to Banjai. He is a CPA and a small business owner, and we're talking about reversing your thinking about taxes and CPAs. Just before the break, I mentioned that we're going to sort of segue into crypto and cryptocurrency. There are a lot of things, EFTs, cryptocurrency, lots of different products coming into the marketplace that, technically speaking, don't exist. If you're dealing in something that's theoretical, that doesn't exist, like crypto or EFTs, do you still have to pay taxes on that?
Yes, absolutely. You would treat them just like you would treat stocks, right? Do stocks really exist? No. But if you sell stocks, you make a profit on the stocks, you pay capital gains. As simple as that. You have crypto, and they appreciate due to you selling them or trading them. Somehow you would trigger capital gain. Now, if they just appreciate on their own as unrealized gains, meaning you haven't sold them or anything of that nature, then just like stock, you would not be paying taxes.
All right. So investing in cryptocurrency or in EFTs isn't a hedge around paying income tax.
No, absolutely not. You can let them, you can invest and let it stay there. As long as you don't sell and things of that nature, then you're good to go.
Okay. And even if you get involved in capital gains taxes, it's still considered a taxable gain by the government now.
Yes, absolutely. Capital gain is always taxable, and it's just a lower rate. It is from 0 to 20%, as opposed to 0 to 35, 39%, which is the regular percentage for the income taxes.
For earned income. Gotcha. Okay. There's a big debate going on. We're in a generational shift. More and more things are being done electronically, as opposed to in the physical world. People are getting bills electronically. They're saving documents electronically. They're emptying their file cabinets at home and putting everything on their computer or in the World Wide Web. What about tax returns? What's the safest way now to file tax returns? Because I know for me, it always used to be you signed your tax return, you put it in an envelope, you put postage on it, you took it to the post office, and you felt really secure putting it together that way. Is that still a good way to do it?
It is a good way of doing it, but is it the safest though? I would say no.
You would say no. Why?
Because you can e-file, you can electronically file your tax returns, and there is no risk of your tax returns getting lost in the mail or taking too long to process, and so on and so forth, right? Mm-hmm. Within a matter of days or weeks tops, the IRS would process your tax returns if you e-file, if you file electronically, right?
Okay.
If you send it by paper, it takes months.
Takes months. Okay.
Yes, sir.
All right. So it sounds to me like it sounds to me that if you're expecting a refund, you want to e-file. But if you're expecting to have to pay the government money, maybe you want to still send them a paper return.
Yes.
Oh,
yes.
Okay.
But
yes.
You have to be careful. You have to be careful. Why? Because just because there is a delay in processing doesn't mean that there is a delay about you paying taxes. You pay taxes as you go. As you earn the money, you're supposed to be paying taxes, right? Hence your estimated tax payments, right? Because you get penalized with penalties and interest if you don't do your estimated tax payments on time, which means that if you delay, what you're delaying literally is the IRS notice for you to pay, right? So you
Okay.
kind of delaying the clock to start ticking a little bit, but you're not delaying the penalties, you're not delaying the interest. So it is better for you to pay as you go, as you earn it. That way you are on the clear.
What about W-2 employees? A lot of W-2 employees, they'll take like 9 deductions in order to get more money to live on and then worry about paying the IRS later on. Is that still a good way to go about doing it?
It's not a good way, but sometimes it's the only way you can to be able to survive, right? You have to feed your family, you have to pay your rent, you have to pay your mortgage, right? Then you, at that point, people would choose to do those things as opposed to paying the IRS, right? But then, like I said, there is penalties involved, there is interest involved, and it's just a risk that people will take, unfortunately, to be able to make ends meet.
Okay. Let's switch gears for a moment. You know, a lot of people do their taxes themselves. A lot of people have tax preparers, which are people that just make a living doing tax returns. A lot of people have their taxes done by accountants, and then some people have their taxes done by certified public accountants, CPAs. Is there a difference? Is it better to hire someone who's a CPA to do your taxes rather than a tax preparer?
Yes, absolutely. Absolutely. But you have to be strategic about it. You have a W-2, you work one job, you don't really have much of anything else going on. The difference between me as a CPA filing those tax returns compared to somebody that didn't even go to school is no, there is no difference because you don't have anything going on. There aren't any nuances going on. The issue becomes when you have rental properties, you have a sole proprietorship going on the side, you have cryptocurrency, you're investing in stocks, you are married, you have children, you have mortgages, you have a lot of things going on. You definitely want to have a CPA file your tax returns to maximize either your refund or to minimize the taxes that you're going to be paying to the government. Because the nuances that exist, a simple person that did not go to school for taxes wouldn't be able to understand.
Okay, so let me ask you, who's responsible for any mistakes on the return?
The individual, the taxpayer, is responsible.
The taxpayer is always responsible no matter who prepared the return.
Always. That's why they sign their taxes.
And that's why you want, you want someone that knows what they're doing, right?
Absolutely. Absolutely.
Gotcha. So Q, tell me something. If somebody in our audience would like to get a hold of you and discuss using you for their taxes or for their small business, what's the best way to get in touch with you?
My phone number, which is right there, 818-294-6854. They can call me anytime. I'll respond to any questions that they might have. They can also go to 500taxes.com to file their business tax returns just for $500, regardless of complexity and regardless of revenue levels.
And your website is voppel.com, VOPPELL.com, correct?
Exactly.
Great. Q, it's been a pleasure having you on the show. Very informative. I have no doubt that we've reversed some thinking about CPAs and tax preparation. Thanks so much for coming on.
You are very welcome. My pleasure.